Alright, welcome to this video. Today we'll be talking about the second type of entry that I like the most. If you're just joining our YouTube channel, welcome. We are currently dealing on a series we call Entry Series, where we talk about several entry models that are extremely powerful to trading the financial markets. So we did part one, and if you haven't watched that video, I recommend you watch that first entry model where we talk about a couple of things, and we call it the breaker block entry. That's really powerful. The feedback gotten so far has been amazing. All right, so the second entry model, the second and the third, are what I like to call liquidity entry model, and I use these the most. I use this regularly, like you saw in the thumbnail. First of all, what are liquidity? Very quickly, liquidity simply means highs and lows. Every highs and lows in the marketplace, either higher highs, lower highs, etc., they are all liquidity points. So like this little diagram I just drew above the screen, that area is an area of liquidity, this is an area of liquidity, that's an area of liquidity, etc. And it is important to know that price moves from liquidity to liquidity. In fact, from studies, the two things that drives price action, either upward or downwards, are number one, liquidity pool or liquidity point, like I mentioned, and number two, fair value gap. All right, and just if you don't know what fair value gaps are, we have a lot of videos in this channel. We talk about this a whole lot. So when you see price driving upward aggressively, it's either going to take out a liquidity or fill a fair value gap. All right, it is either going to do that or it is coming from a point when any of these two has been done. Do your study, you are going to see that this is a fact, and this gives you an edge, as it were, in the market. Right, so the entry number two we'll be talking about today, I already called it liquidity entry, and this entry I am again assuming, like I did in the first model, where I assumed you already have a sense of direction in the market. You already have your bias in mind, and that's very simple. From simple market structure to whatever means you need to know that the market is either trending upward or trending downward. So I'm assuming you already know that already. That's number one. Then number two, is important to know that this model is most suitable to trade continuation of your direction. It's most suitable to trade continuation. So again, I have simplified trading into three things. First, you understand the psychological part of trading. Second, you know the bias. And third, you trade your bias. Simple. When you follow these three set of rules, either SL or TP, you move to the next setup. You don't change the variables. You just keep it simple. Keep it simple. So what is this model all about? Let's keep this video very quick. First of all, you've known your direction. So let's assume from your bias, you are bullish. All right, you are bullish, and so you want to see price rally up, and then of course I'm going to draw out a couple of things. Take out BOS, that is break market structure, to the left, and then you want to see price run back down to take out the liquidity, right, and then expand higher. So what that means, let me draw it out in a more simpler term, is that you are bullish, right? So price pulled back, rallied, and break structure right there. You want to see price come all the way down to take out this low created, and that is where you are buying from. Then it expands. This setup usually leads to expansion. All right, and if you get it correctly, you are going to be in the money almost immediately. Now I must say this very quickly. How far price will take out this liquidity here, right, is determined by whether there is an order block below or there is a fair value gap below. So what that means in simpler terms is, if you have an order block just below that liquidity area, so you have price do this, and then probably you have an order block candle here or a fair value gap, any of them below, expect that price will come down, take out this liquidity, and react. It will go further into the order block or fair value gap and expand. So what that means is that when you spot the presence of fair value gap or order block below these areas, what you simply want to put your stop loss below that area. You can even be a bit more creative by moving your buy limits very close to the fair value gap or the order block, so price can fill you in and expand with it. You make profit. Your TP would actually be the recent high created. This is for a buy scenario. For a sell scenario, it's quite simple. You already know your bias is bearish, and then you want to see price rally down. Now, if you need a checklist, first of all, you must know your bias, bearish or bullish. In this case, bearish. Fine. What do you now expect? You want to see price break aggressively, not very aggressively like the first one. If it breaks very aggressively, then understand that you are going to be dealing with the first entry model. Again, if you haven't watched that video, go back and watch that. But it breaks. You want to first of all know your bias. One. Secondly, in your checklist, you want to see price break or BOS in the direction of your bias. So I am bearish. I now see price break structure in the direction of my bias, right? And then once that happens, now it breaks it cleanly with no area of liquidity inside or in between. That's number two. All right, it breaks it cleanly with no area of liquidity in between or inside the range. But by range, I mean from this high to the current low. Then finally, you want to wait for price to pull back to take out that high as a form of liquidity, and that's where you want to sell from and follow price to the downside. Of course, the recent low created will be your TP. In this example, how far price will rally before it starts selling will also be determined by the presence of fair value gap or order block above that area. Hope that's understood. So let's take a couple of examples and wrap this all up very quickly. It's very simple. You can apply this across any trading assets that you are trading. All right, so this is euro dollar. I just marked that to save the time. A couple of examples. All right. Oops. All right, so the charts, it's actually everywhere. So let's just take, obviously, the first thing we talked about is that you must know your directional bias. So in this example, we are bearish, right? 1 hour time frame. We can do this in any time frame. We are bearish, so I want to see price break structure and then return back to the high created. All right. This may not be a perfect example, but for good measure's sake, look at this high here. We're going to take other crystal example that meets all of our criteria. So you can see that liquidity area, you are selling from there. So how does this even relate to what we are dealing with? See this BOS right here. So price from that high broke this, return back, that we are going down. That's not a crystal clear example, so let's take another one. All right, we're going to talk about that entry in our next model. That's actually another entry model. So I erroneously filled it in on this chart. Here's another one. Price is bearish. Your first thing, you must know the direction, and then you want to see price break structure and a return back to that high. So we're bearish in this example. We see this break of structure right there. All right, and then this high becomes our target liquidity to sell from. Look above. Can you see any other block of fair value gap above that area? No. The other block you see right there is resting there. That green candle, which I marked ahead of time. And of course, you see price later came back to react off it, but that's not our concern. Our business is that we have a high created in a bearish market, then price broke structure right there, waited for price to return all the way back, take it out, we're selling from there, and our TP is the recent low created, this low right there. So that is our TP hit, right? There are times, of course, there are no 100%. I don't know how long I'll keep saying that, but it's important. You need to understand. But these patterns, once you see them, all right, it makes all the sense in the world. In this mini bullish market condition, you have price pushed up, came down to this low, rallied up, broke out this liquidity or broke out the structure right there. Let me zoom right in. All All right, if I want to join in the next buy, what do? You wait for price to return back to take out this low right there. Right there, I am buying from there, and just below it, you see there's a little bit of fair value gap from that candle to the other candle extending time, and we said that will be the distance price can possibly go to in taking out this liquidity. And then once I am buying here, my take profit will be the last high created. It can be that high right there. You're tipping at that level. Are you seeing it? Very simple, recognizable pattern. Know your buyers, wait for BOS, clean BOS, or BOS does not leave stops, and then wait for price to come back and take that liquidity, and you are buying. Look at another one here. This will be the final one for this video. You see, this is clear. Price in a bullish market, right? Pulled back, rallied up, broke this structure right there. That was a structure break. All right. And notice all of these examples, we are not seeing very powerful breaks like this one. That will take us back to type 1. So this model works perfectly when the BOS is not, there is no much volatility in that break. It just barely breaks it. All right, so what do you expect? Expect price to come back to take out this low. So look at this break all the way that level, and then you expect price to come down here, and you are buying. What again would be the distance of your SL below this level? There are really no fair value gap except from these candles all the way to that level. So I'm not going to put mighty stop loss to that level. So you can see the fair value gap from here to there. That's what I marked. So you can possibly put your, always your buy limit in this example should be at that level. All right, because once liquidity ticks, what did I tell you? There will be expansion after liquidity is grabbed. So you can put your stop loss just around the 50% of the fair value gap, so it's not very large, and then your TP again is just above the previous high that got created. All right, so this is just around that area, and that is just that. This is a nice 2-1 ratio, 2.68, and I can go on and on. By the way, what I did in this 1 hour time frame, you can do it in any time frame, 1 minute time frame, 4 hours time frame, monthly time frame, etc. All right, you can see I didn't mark plan for this. You can see the BOS happened here right there, and the price rallied back, take out this low, and boom, every time it's taken out there's expansion. So you want to join that expansive move. Now please do the due diligence by backtesting this and let me know what you think about this. I'm going to stop here, and in the next series of videos we're going to talk about the second or the third entry type, which put all of these things together. You don't need all of them to be profitable. You just need to master one and wait for it to show up, and you will be profitable. Once again, if you are not subscribed to this channel, please do where to subscribe, and so you'll be the first to be notified once I upload the next video. Once again, thank you so much for coming always to this channel to motivate and the comments. If you gain the value, please type the word value below. I'll take a couple of you and give you gifts, surprisingly, as it were. Finally, if you want to be part of our ongoing mentorship, you can simply go to our website at www.golfcoursefs.club/enroll. all right, I'm writing it right on the screen, golfcoursefs.club/enroll. all right, fill out this form, and if you're qualified to be part of my mentee for the year you're watching this, I will contact you and get you on board at golfcoursefs.club/enroll. And I'll see you on the next video. Jay Okoli signing out. Peace out. Thank you.